Well, thanks for stopping by. What we're going to do is we're going to teach you about reverse mortgages. The most important thing I want everyone to take away from this is educational. It is not designed to quote or say you do or do not qualify for a reverse mortgage loan. We will use round figures. Everybody's numbers are different. So if you like what you see, give me a call. We will educate you. We will not sell you, okay? It's never a good idea to sell somebody anything. It's only a good idea to educate them and then let them make their own decisions. Now, reverse mortgages have changed significantly over the past few years, but sadly, most seniors only remember either some old rules they heard or some horror story, which in most cases they didn't have all the facts for. How do I know? Well, I know what the old rules are and I know what the new rules are, and I know why things happen. Now, today we're going to talk about the rules and how the program has changed. And all of these are beneficial to seniors, and it makes this product very, very safe. Okay? Here are the things I hear about all the time: foreclosure issues, being forced to sell your home, losing all your equity, high cost of the reverse mortgage, ensuring your heirs have something at the end when you sell your home, title, who owns the property, what happens when you sell, the risk to your heirs, and death of a spouse. These are all very fair questions that every senior should understand. Foreclosures. Well, number one, they only occur when a loan contract is not honored. And what that means is if the borrower does not pay their real estate taxes or HOA dues, yes, they can be foreclosed upon. And this is why most foreclosures happen to people with any type of mortgage, not just a reverse mortgage. Okay, we could go into why it happens with reverse mortgages, but understand this: it is always the person, not the product. The reverse mortgage does not force a foreclosure. It is the person who doesn't hold up their end of the deal. Now, there is an exception. Now, this exception has been handled under the new rules, but I want to talk about it because maybe you heard about a spouse at some point that couldn't refinance the house and they got foreclosed upon. Under the old rules, this could occur to a spouse under the age of 62. And notice I said the old rules does not apply anymore. Okay, this would happen when one of the spouses passed away and the other spouse was under age 62. And that other spouse had the opportunity to refinance that home or sell it in a timely manner. But if they couldn't do either one of those, then yes, they could get foreclosed upon. Now, what's most important here, under the new rules, okay, the surviving spouse has all the same benefits as the 62-year-old deceased spouse. So even though that was an old rule, they recognize that wasn't a good rule, and that's been changed. And that has been changed going forward, and you don't have to worry about that if one spouse is under 62 and one spouse is over 62 when you buy a home, okay? And if you're refinancing the home, it works the same way, the exception if you're taking a monthly income. We can talk about that if that is where you're at, okay? But that's the only thing that stops the monthly income. The spouse always has the same access to the house. They do not get foreclosed upon. Again, assuming they pay their taxes and insurance, all right? Let's talk about being forced to sell the home. Now, as we said earlier, you're responsible to pay real estate taxes, homeowners insurance, HOI, flood insurance if applicable, any applicable dues, HOA or other, right? You're also supposed to keep your house maintained. You don't start a meth lab or run some fraudulent activity or not leave your grass 6 feet high. That's just not right to do. But it's, again, never an issue. Okay, this is your responsibility. If you're planning on keeping your responsibilities, which most seniors do, you're never going to have an issue. Now, if you do this, the bank will never force you to sell the home. That is in the contract. It always has been, and it always will be. Okay. If you're keeping up your end of the deal, the bank is not looking to kick you out. Remember, there were some old rules with seniors under 62, but that's been addressed in the previous slide. Okay, people who pay their taxes and insurance, okay, that are 62-year-old borrowers, even in the old days, were fine. It was only that issue that we discussed that's been changed. Right? Now, like I said, this has always been the case. The issue of the forced sale was due either to the death of a spouse previously discussed or in non-payment. Okay. So this is the only time. So simply put, if you're going to pay your bills, you're not going to have a problem. Now, losing your equity. The reverse mortgage loan will increase over time. That is the nature of the loan. But why does it increase over time? Well, because you're not making any payments against borrowed funds. The reverse mortgage loan is a loan. So if you borrow money and make no payments against it, those payments are then added back to the loan balance. That's how a reverse mortgage works. There's no secrets. There's no hidden anything. That's how it works. Okay. There's no free lunch. And when people understand this, they go, oh, okay, now I get it. I'm just deferring all of my payments until I sell the home. And the answer is yes. That's exactly what you do. Okay. So now, in terms of losing your equity, any equity that is available at the time of sale is yours or your heirs. Any appreciation or depreciation applies to you as with any homeowner. Okay? So it wouldn't matter what type of loan you had, if it was cash that you owned the home free and clear, you're going to benefit by appreciation and lose based on depreciation. Okay? Now, an example, I just said example, you sell in 5 years. Now, everybody's situation is different. Everybody's interest rate is different. So all I want you to know is this. If you were to sell your home in 5 years and your home did not dramatically drop in value due to some crazy market fluctuation, right? You're going to have equity in your home. Why? Why can I say that with confidence? Well, because you're only going to have 5 years of non-payments. So in other words, you won't be paying on a loan for 5 years. How much money would be added back to your loan? It would depend on the size of your loan. It would depend on your interest rate, etc. But what I can tell you with absolute certainty, unless the market drops dramatically, you're going to have plenty of equity in your home. Okay. And again, we can discuss all of that on a case-by-case basis. We can look at your home, your loan, the market conditions. We could say, what if the house goes up 1%, 2%? If the house stays the same? Again, I just want you to have general understanding of, losing your equity. How does that happen? Okay. Some people think reverse mortgages are very high cost. Well, why does it cost more? The FHA mortgage insurance component, 2% of the sales price or 2% of the appraised value, depending on if you're doing a purchase or refinance, and 0.5% a year are the rates today, as I do this in August of 2018. Now, insurance, as you know, costs money. Life insurance, car insurance, flood insurance, it all costs money. So why do we get these other types of insurance? Well, FHA insurance is designed to protect against loss and provides peace of mind to you and your heirs. You buy life insurance for one reason, car insurance for another reason, flood insurance for another reason, but it's always designed to protect. Well, FHA mortgage insurance, which is on this product, is designed to protect and give you peace of mind. What is it protecting you against? Well, we're going to talk about that soon, okay? In the case of a reverse mortgage, it protects you and your heirs, keywords, in the event if the value of the home is less than what you owe at the time of sale, the FHA mortgage insurance steps in and covers that shortfall. Here's a simple example. Sale of the home. You sell your home for $100, you owe $120, the $20,000 is covered by the FHA mortgage insurance, not by you, not by your heirs. Okay, so later when I say your heirs have no financial risk, certainly equity is going to erode over time, okay, if the appreciation of the house doesn't keep up, but it's going to. That's the nature of the beast. You're not making a payment. So their financial risk is here mitigated or eliminated, I should say, by the FHA mortgage insurance. Okay, so yes, there is the erosion of equity, but they're never going to have to write a check for the shortfall because that's what the FHA mortgage insurance is for. So hopefully that's crystal clear. If not, remember, you can call me. You'll get my number at the end of this. Ensuring that your heirs get your equity. A lot of people say, you know what? I don't want to do this HECM thing, this reverse mortgage thing. It's all the same stuff because I want my kids to have equity at the time. And I think that's admirable. Okay. Now, what I want to tell you is with the HECM for purchase, in other words, if you're buying a house with a HECM versus doing a refinance, okay, which I say AKA the reverse mortgage purchase, your cash down payment will be approximately 60%. Now, this varies with age and credit. Again, that's why we always have to talk. These are just general rules of thumb. Now, if you've only put down 60% instead of 100%, don't you have 40% left over? So on a $200,000 house, you have $80,000 left over? Well, if you have $80,000 left over, or 40% or whatever the purchase price was, couldn't you give that money to your heirs right now? You were going to put it in your house and do nothing with it. Why should they wait for 10 or 20 or 30 years for you to die? If you really want your heirs to enjoy your money, it's an option, right? And you're not giving them the whole thing, you're just giving them 80,000. You could also invest that 80,000 in our example. So if you do live for another 15, 20, or 30 years, that 80,000 could be significantly more money, right? Depends on what you invest in. Now, depending on when you sell your home and how much it appreciates, you may still have significant equity. Nobody knows the future, so certainly we would not make claims about that. But sometimes the markets go up so fast that you won't have negative equity in your home. But again, it all depends on the appreciation. So many variables. So we don't make promises. All we do is present information and specific scenarios, and then you can decide if it's right for you. Here's a big question. Title. Who owns the property? Answer, you. The bank is not and never has been on title and never will be on title. Okay? Crystal clear. You own the home. My next door neighbor is 87 years old. He was talking to me about money one day. I know his house is free and clear. And I said to him, well, why don't you do a reverse mortgage? He says, well, I don't want to give my house to the bank. You're not giving your house to the bank. The bank is not on title. The bank is simply lending you money, period. Okay? Now, at the time of sale, the bank is paid what they are owed. The difference, less normal selling costs, goes to the seller or their heirs. Now, think about that. At the time of sale, the bank is paid what they're owed. Isn't that how every other loan works? The answer is yes. Whatever the bank is owed, they get. The difference, less normal closing costs, okay, and selling costs, goes to you. So if you sell your house for $200, but you have a loan for $100, how much money do you get? $100,000 less closing costs and selling costs, right? Just like every other loan you've ever had. Same way here. What is the risk to your heirs? Well, there is no financial risk to your heirs. We did talk about equity erosion, if you will, or some of your equity being you losing equity over time because you're not making a mortgage payment. But what's the financial risk to them? They're not going to have to write a check for a shortfall. Why? Because any shortfall at the time of sale is covered by the FHA more insurance. That's why the loan's more expensive. That's why you took the loan, because you like the fact that you can live in that home for as long as you want and never worry about market fluctuations. You may have done a reverse mortgage purchase and done it so you could save 40% of your cash. And again, that's an estimate. Okay, everybody's situation is different. I got to keep throwing those disclaimers in. Now, death of a spouse, what happens? Sadly, this is going to happen to all of us, right? This is a huge, I can't express the word change from the old rules to the new rules. Now, we talked about this in the early slides, all right? If one of the spouses were not 62 at the time of closing, they still have all the same rights as the deceased spouse who was 62 at closing. So in essence, nothing changes. The bank, you'll send the bank a note and say, my spouse passed away. The bank will send you a piece of paper back and say, hey, please fill out this form, and everything stays business as usual. If the bank sends you a form to fill out, please fill it out, because that's important and it's part of, making sure everything goes right for you. But it's that simple, okay? You have all the same rights, okay? Now, you're still unsure? Well, the reverse mortgage is governed by HUD. It isn't willy-nilly lenders that run around giving this money and changing the rules. Every single lender has the same rules that we all have to follow, whether it's a loan officer who works at a brokerage company, whether it's a big bank, whether it's one of those internet mortgage companies, which I would encourage you to stay away from. But everybody has the same rules. Nobody has different rules, okay? And that makes this very safe. All lenders must follow HUD rules, and all files are 100% audited by HUD to make sure they're compliant. So in other words, nobody can do bait and switches with you in this. Nobody can tell you something and then change it later on in the game. None of it. Every file is looked at. So if there's a bad person out there doing bad things, they're going to get caught very quick. Now, I understand I went quickly, and I understand you still have questions. I am always available to answer your questions. I will never sell you on a reverse mortgage. I will simply educate you. I have a lot of information, not even a lot, 2 pages of frequently asked questions. And those pages usually answer 95% of all questions, if not 100%. But my information is there. I hope you found this educational. And remember, everybody's situation is different, and we want to help you the right way. So I'd encourage you to call me. We'll run your numbers. It doesn't cost anything. You know, if you want to pull your credit, it isn't expensive. You can see where you're at. You can see if there's any surprises. We want you to have success. So I hope that you'll give me a call, and I hope that this has been educational and helpful to you.